would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals, and in certain cases they're going to be paying substantial tariffs. There'll be fair deals. As you know, I spoke this morning with the Prime Minister of Japan. We have a great relationship with Japan. We're going to keep it that way, but they're coming in to meet, and other countries are coming in. With China, as you know, against my statement, they put a 34% tariff on above what their ridiculous tariffs were already. And I said, if that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on.
President Trump sticks to his guns on tariffs and says he will go easy on Japan and threatens to raise them even higher on China. And Beijing is in no mood to give in. Live from the India Global Forum here in Mumbai, this is Inside with me, Haslinda Amin, a show where we will look closely at the escalating trade tensions and also hear why India is taking a different approach to China's. Now, Asian shares bouncing back after the worst day on record. Japan leads gains on hopes that it will get priority in trade talks with Trump. Chinese stocks digest Trump's threat of an additional 50% tariff while rebounding from a historic rout. The yuan fell to its weakest since 2023 on fears of the escalating trade war. Even as China threatens to fight back, several countries, including Japan and India, seem to prefer to talk Trump into going easier on them. We hear exclusively from the Indian Commerce Minister and also from the CEO of India's biggest stock exchange. And economists have been trashing the formula used by the Trump team to calculate the tariffs. We hear from a conservative think tank that seems to agree that a tariff formula makes no sense and argues even China should just see 10%. Some relief in the market in Asia, bouncing back after the worst day on record. Japan leading gains here in Asia on expectations they will get priority trade talks with Trump. We're also seeing some reversal in terms of Chinese stocks rebounding from that historic rout as state funds step in, and Indonesia stocks plunging after that week-long break on tariff turmoil, playing catch-up. As you can see on your screen, we have the MSCI Asia Pac Index in positive territory, finally up by about 2% as we speak. Now, overnight on Wall Street, the S&P 500 saw its largest intraday range since March 2020. It briefly surged as much as 3.4%, following unconfirmed social media reports of a 90-day delay to tariffs. The White House later clarified it was fake news, and the index ended the session slightly lower. Investors also keeping an eye on Trump's latest tariff comments. He reiterated on Truth Social that he's planning to impose additional 50% import taxes on Beijing if it doesn't withdraw its planned counter tariff. And China refusing to back down and has vowed to fight till the end. Let's bring in Min Lo in Hong Kong for more on Beijing's response. And Min, China digging in its heels.
That's right. We heard early on this morning from the Chinese Commerce Ministry saying that they're going to fight till the end. That's one. But two, they are also calling for dialogue. So they are not closing that gate on negotiations just yet. But at the same time, they are not banging down the door to get the U.S. to come to the table. They're pretty patient about it. That's what we have heard from a Chinese analyst that Bloomberg has interviewed. They believe that at some point, Trump's efforts on these tariffs are going to fizzle out in momentum, especially given that Trump is getting some push pushback domestically as well, given the White House has had to come out to veto a bipartisan bill put forward by the Senate to limit his powers on imposing tariffs. But look, the 50% additional tariffs that has been threatened by Trump, that would put the total tariffs on China to over 100%. Essentially, it would decimate all trade, bilateral trade between U.S. and China. And I think China at this point is choosing not to engage further. It seems their attention now is all about focusing on doing their own things well. There was the headline of the editorial on the front page of the People's Daily yesterday, and a lot of these state media lines talking about taking extraordinary measures to support the domestic economy to ring fence against these risks of external shocks.
The thing is, Min, we kicked off the year thinking that there could be negotiations, there could be talks between Trump and Xi Jinping, but not to be, unlikely to happen.
Yes, part of Trump's threat and that ultimatum that's supposed to end today, he says if China doesn't roll back those retaliatory tariffs, not only is he going to add the 50% tariffs on top of what has already been announced so far, he's also going to terminate all requests for meetings from the Chinese side, which means that any potential talks between both sides, the prospect of that is just diminishing as we count down towards the deadline, less than 24 hours away, and it doesn't look like China is going to reverse its tariff policy just days after announcing it, because remember, the way China makes policy is extremely deliberative. It's pretty much the opposite of Trump. They are very unlikely to reverse course just days after announcing that they would retaliate with the 34% tariffs. But at the same time, they have not mentioned that they're going to add even further counter actions to match that additional 50% from Trump. So they're kind of capping it there for now. And again, as I said, focusing their attention inward, pledging measures to support the economy, to stabilize the stock market. We have heard the PBOC saying that they are going to provide relending facility to some of the state-owned, the sovereign funds which are stepping in to buy up the ETFs in the capital market to put a floor on those markets. And we also know policymakers over the weekend had met to discuss possible front-loading of the stimulus policies. Morgan Stanley expecting we could see imminent rate cuts and triple R cuts, and potentially even China considering to expand the trade, the deficit target maybe in the second half of the year. So the next date to look out for is the April Politburo meeting. That could be a potential window for more policy adjustments from China.
That's right, and truth of the matter is that the U.S. is no longer a very important export market for Chinese goods. Min Lo, thank you so much for that. Now, meanwhile, countries seeking to entertain talks with Trump seem to be getting a thumbs up from investors after Japanese Prime Minister Ishiba called Trump stocks in Tokyo bounce big as the country looks set to move to the front of a long line of countries seeking a rollback on the reciprocal duties. Treasury Secretary Scott Bessent, who will lead the American side of negotiations, says he expects Japan to get priority treatment among trading partners for coming forward very quickly. And India seems to be looking to play this in a similar fashion to Japan. The topic of navigating Trump's tariffs is dominating the conversation so far here in Mumbai at the India Global Forum. In my earlier interview with Indian Commerce Minister Piyush Goyal, he downplayed the impact of duties on the relationship between India and the US.
We all know that it's a formula-based tariff, and based on that formula, friend or foe, everybody fit into that formula and had a tariff imposed on them. So it's nothing to do with the fact that we are friends. Clearly, Prime Minister Modi and President Trump are very good friends, as are the administrations of the US and India, and as are the business persons and people of the two countries. So I think let's not conflate issues. There's nothing to do with, for that matter, UK is a very good friend, US is EU is very good friends all over. But I think this is just a formula-based tariff.
So are you in conversations? Are you hoping that perhaps you'll get an exemption or perhaps a delay in the implementation?
Well, I think what we discuss in the boardroom is not discussed in a public forum.
But you are in conversations then?
That is a matter of public record. I think when the Prime Minister and President Trump met in February, they had both announced that we shall enter into discussions for a bilateral trade agreement by the fall of 25. Both countries are old friends, old allies, trusted partners. Our businesses work seamlessly with each other. India opened their arms to all the tech giants, be it Google, be it Meta. All of them were welcome in India, even when many other developed countries, and certainly China, did not allow them to operate in their countries. We have hundreds of thousands of students in the United States. We have a strategic partnership which transcends the economy. So there's lots that we are working together on. This will also be something that will add luster to our relationship.
So that trade deal is coming, and you're confident it will happen by year end, including the other trade deals that you're working on, including the UK as well as Europe, which you have just indicated are friends.
And I'm not going to give Bloomberg a headline.
Put this in perspective for us. With what's going on right now, are we at the start of deglobalization? We've been throwing this word deglobalization for a while now.
I don't think so. I think this is re-globalization with honest terms of trade and countries which believe in the rule of law, like India, working in partnership with like nations who also would like to have an orderly framework. In the short run, there could be some turmoil, but as I mentioned earlier, India believes in converting every crisis into an opportunity.
So how do you seize the opportunities? What opportunities do you see? How does India play a bigger role in the shifting supply chains?
Ms. Amin, we are a democracy. We believe in the rule of law. There's fair play. We don't discriminate between Indian or foreign investment. All are welcome. The rules of the game are equal. Everything we do is transparent, and we have a very, very independent judiciary and ferociously ruthless media. And add to that the social media now. Unforgiving. So obviously in India, we offer a conducive environment.
Indian Commerce Minister Piyush Goyal in a pretty rare fireside. We'll have more from him later this hour. Coming up, our next guest believes that President Trump's tariff formula makes no economic sense and that it's based on an error. Kevin Corinth from the American Enterprise Institute will be joining us next. Keep it here with us. This is Bloomberg. Welcome back. More business executives are sounding the alarm over Trump's tariff policies after Pershing Square founder and vocal Trump supporter Bill Ackman called the move a mistake. JP Morgan CEO Jamie Dimon is urging a quick resolution to uncertainties sparked by the tariffs. He wrote in his annual shareholder letter that the quicker the issue is resolved, the better, as negative effects increase over time and would be hard to reverse. The Washington Post also reports that key Trump advisor and political donor Elon Musk made direct appeals to the president to reverse his policies, but it notes that Musk's attempted intervention has been unsuccessful. Meanwhile, BlackRock's Larry Fink says most CEOs he talks to think the U.S. is already in a recession. Fink also says he foresees more of an economic slowdown in the coming months with elevated inflation and a weakening U.S. dollar. While some of the hardest hit countries by Trump's tariffs are taking issue with the formula used to calculate those levies above the 10% baseline, including Malaysia.
The government categorically denies the claim that Malaysia has imposed 47% tariff on U.S. imports into Malaysia. We don't agree with the basis for calculating this tariff, and we are seeking clarification. This inaccurate basis for calculation has resulted in Malaysia being imposed this retaliatory tariff of 24%.
Let's bring in my next guest, who's written a report saying President Trump's tariff formula makes no economic sense. Joining us is Kevin Corinth, Senior Fellow at the American Enterprise Institute. He also served as Chief Economist in the White House's Council of Economic Advisors. Kevin, good to have you with us. So it is based on an error that's having massive consequences.
It is an error, and it's not just an error in the math. The whole concept of defining a tariff solely based on the trade deficit the U.S. has with another country is conceptually flawed. So just on top of that, they made another error, which actually, even if you buy the way that they created this formula, it overstates tariffs by a factor of 4. And in fact, if you applied the right parameters, you would have the vast majority of countries having the minimum 10% tariff, and the maximum tariff would be 14%.
So essentially, whether you have a trade deficit or a trade surplus, you will get slapped with a tariff of 10%. Is that a good way of looking at it?
That is the way that the tariffs have been implemented. Economically, of course, that's not a good way of looking at it. If you really wanted to get reciprocal tariffs, you'd have to do the hard work of figuring out exactly the tariffs that other countries place on the various products that they export into the United States. You'd have to calculate some of the non-tariff trade barriers that they do impose. I actually have heard some of that work was done within the White House, but the president ended up ignoring that analysis and instead decided that the tariff should depend only on the trade deficit with a given country. And the problem is that while it's true that a trade deficit would depend in part on tariffs, it also depends on a lot of other factors, such as comparative advantage. So what types of goods that a country is particularly positioned to produce and whether the U.S. would be consuming those goods depends on geography and numerous other factors. And so you really cannot create a formula for a tariff solely based on the trade deficit.
Including international trade flows as well. If you take a look at the tariffs being imposed by the Trump administration, we're looking at, 26% for India, where I am right now, 34% for China, 46% for Vietnam, 50% for a small nation like Lesotho, which is among the poorest nation in the continent. I'm just wondering, if you were to remove the error, what kind of tariffs should these countries be implemented with?
Sure. If you remove the error, it's a very easy calculation. Just take whatever the tariff is that the Trump administration published for each country, divide it by 4, and that's essentially your new tariff. And so if you believe, again, their formula, the highest you would have is about 14% or a little bit less than that. Now, I would not suggest that those are the correct tariff rates. I mean, if we're trying to do reciprocal tariffs, which I am not a fan of even, but if you wanted to do that, you again would need to do the work of calculating what their tariffs actually are placing on the U.S., add in the non-tariff barriers, and that would be the right place to start. But I think the president just doesn't think about it in that terms. He believes that if there's a trade deficit with a country, that means that country is cheating us. And that's just not true, especially when you get to some of these lower income countries that just simply are not consuming some of the goods that we're producing, and they get it from other countries. There's a lot of countries out there, and there's a lot of flows between them, and it just doesn't make any sense to punish other countries, first of all, but mostly to punish ourselves. It's going to increase when we put tariffs on. Consumers pay a portion of that increase in prices. It's going to make it harder for businesses to have any certainty in the U.S. About investment decisions, and you end up hurting everybody. And I think that's why you're seeing such a large market reaction in terms of the stock market and in terms of increased probability of entering a recession in the U.S. So this is good for nobody.
Kevin, there is a quotation here which says, nobody knows anything. Those responsible, those implementing have no idea what they're doing. First, do you agree with that? And secondly, if you had to make sense of what's happening right now with those tariffs, how would you do it?
Yeah, I think it really comes down to there's just conflicting motivations. I mean, some people, I think, within the administration, want to raise money, import. If you tax imports, that's going to raise money for the Treasury. Some people see this as a way to, create more manufacturing jobs in the U.S. Some see it as a negotiating ploy to say we want to have free trade everywhere. And I just think, no, there's not really an alignment of what the ultimate goal is here. And I think that is a big problem. Aside from the policy itself, it just creates total uncertainty. So if you're a country who wants to say, oh, wow, I really want to comply, I want to not face these big tariffs for things that we're exporting into the United States, I don't think they would know what to do because we're not giving them, the Trump administration is not giving them any kind of clear direction. So I think that's like just the clarity of what the goal is and then what countries need to do to comply would be an important step. Again, like the fundamental thing is we shouldn't want a trade war in the first place, but if you're going to declare a trade war, at least define the terms clearly.
Another head scratcher, I think, is the trade war over fentanyl. That doesn't make much sense either.
Right. So this was an earlier motivation. So it seems that the motivations for the trade war have changed day to day and month to month. And I think this goes back to the lack of clarity. But, this started a month ago, actually a couple of months ago. The Trump administration decided to impose tariffs on our two neighboring countries, Canada and Mexico, under the guise of fentanyl. Now, fentanyl is a very serious problem. The drug epidemic in the United States claims 100,000 lives or more per year, at a staggering economic cost, not only to our economy, but also just the lives lost in senseless ways. So it's a huge problem. But the problem is that it's not caused, you can't solve the fentanyl problem by putting tariffs, particularly on Canada. I mean, a lot of fentanyl does come through the southern border from Mexico. Fortunately, they've been cooperating with us to help alleviate those flows. 0.2% of all the fentanyl that comes to the U.S. comes to the border with Canada. And so that just suggested to me, like, the administration isn't serious about these other reasons. It wasn't serious about the drug war. It's serious about putting tariffs on our neighboring countries simply because they are a large source of imports into the U.S.
Kevin, I want to touch on China just because Trump said just overnight that he's considering 50% additional tariffs on China. I'm just wondering, where should those tariffs be without the era?
I see. So again, if you take their formula, with China, there's been a layering of other tariffs on top of original tariffs. So I'd have to go back to our table and what they published for China. But I think with China, it's a little bit different from some of the other countries. There are some concerns about unfair trade practices that they engage in. So I think there can be reasonable ways to deal with China. I worry a lot about completely escalating this back and forth.
Kevin?
Yeah, sure.
Kevin, we have to leave it there. Kevin Corinth, the American Enterprise Institute. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Now here's a look at how Chinese assets are trading as mainland markets head off to lunch on the back of what Trump said he's mulling yet another 50% tariffs in addition to what he suggested so far. Traders focusing on Beijing's vow to fight to the end against President Trump's escalating tariffs, raising the stakes in the trade war between the two nations. Chinese stocks rebounding from the historic rout as state funds step in. We're seeing the Hang Seng China Enterprises Index rising as much as 3.5% and the CSI 300 rising not 7%. We're also keeping an eye on those Southeast Asian markets, in particular Indonesian markets, plunging on those tariff turmoils after that week-long break. Of course, this is one country that's been under a lot of pressure on the back of domestic issues as well. Meantime, in Southeast Asia, ASEAN having that meeting in KL. They're discussing tariffs and they're hoping to send representatives to the U.S. to discuss issues to do with tariffs. Now, my next guest says he is buying China stocks on their recent pullback. Let's get insights from Eddy, CIO of Maybank Group Wealth Management. You're buying, Eddy. That's for the brave.
Yes, indeed. If you take a look at how the China stocks have performed recently, they are not spared from the global market doldrums. In fact, the Hang Seng Index notched down more than 10% yesterday, although we are seeing a bit of a rebound. But if you look at the policy front, on the policy front, the Chinese policymakers have expressed a very strong commitment to really backstop the economy. Granted, I guess the US trade tariffs is going to make a dent on the Chinese economy, but there are mitigating measures that the Chinese government can adopt to boost domestic consumption, to really stabilize the capital markets, and plus the fact that China stocks on a valuation perspective is really not expensive. So I think from a risk-reward perspective, we thought that the recent pullback does present very interesting opportunities for investors.
But don't you think risks are actually escalating with the U.S. now thinking of additional 50% tariffs? That's going to cause a lot of headaches for the PBOC, for the government, for GDP in China.
Indeed, we do expect, further tit for tat. China has retaliated with 34% tariffs, and then Trump is now saying 50% tariffs. I won't be surprised if the US were to go ahead with the 50%, and then China may retaliate with 50%. So at this juncture, we have actually taken down our GDP forecast for China this year from 4.5% to 4.2%. But having said that, Trump's tariff actions is going to prompt more self-help by the Chinese government. So on the domestic consumption front, we do expect more front-loading or support measures, including enhancing the trade-in programs, housing sector that could be accelerated measures as well, or policies as well, to further stabilize the housing sector. And on the capital markets side, we're already seeing some action from the national team to try to stabilize the equity markets, and more can be done on this. More can be, expected from this front should the downward trend continue to persist.
Eddy, what's been really interesting is that frontier markets have been doing pretty well amidst the massive sell-off. How are you looking at that? The likes of Pakistan, for instance.
Well, we don't really follow such so-called what you call frontier markets that closely, but suffice to say, I would say that a lot of attention, Hong Kong, China, these are because vulnerable to global market flows, whereas the likes of the more frontier niche markets, they may be less vulnerable or susceptible to all these global market flows. And that is perhaps one of the reasons why we are seeing such markets holding up or not selling off as aggressively versus the likes of Hong Kong, China, or even Japan.
What indicators are you focusing on before pumping in more money or perhaps even buying the dip?
Well, I think there are a few indicators that we are following. Obviously, the trade news flow is something that we will continue to watch, but we do not anticipate any deals to be done in the coming weeks, given the fact that Trump's initial announcement has come in, more extreme than expected. But on the macro front, we will continue to keep a close eye on indicators such as, for example, US jobs data, US inflation, because that will also give us an indication on how aggressive the Fed can actually ease in order to support the economy and prevent a US recession. On top of that, I think valuation is always a good guide. It's not a key reason for us to buy in, but should valuation retreat to a certain level where we think that the negatives has been largely priced in, that actually could also be another signal for us to be a bit more aggressive and start nibbling into the markets.
Eddy, before we let you go, I just want to touch on Indonesia. Even as we see some reprieve in the market for Asia, we're seeing the JCI down almost 9%. This is in addition to the losses we've seen in recent weeks. What do you make of Indonesian stocks right now?
Right. I think Indonesia markets have been under pressure even before the reciprocal tariff announcements. And one of the key reasons here is because if you look at investors, especially from the foreign investor community, there is a lack of confidence on the conviction by the policies implemented by the Prabowo government so far. So granted, valuation is really very inexpensive versus historical average valuation, but we do need to see, I would say, significant improvement on the policy front before that will convince foreign investors actually, or investors as a whole, to get into the Indonesian markets. But on the tariff front, just to say that within ASEAN itself, we do feel that Indonesian economy, well, if you look at the reciprocal tariffs, it's really on the high side, more than 30%. Right. But because it's more domestic oriented, it's probably going to be less affected than the likes of, say, Singapore and Malaysia.
Eddy, thank you so much for that. Eddy Low of Maybank Group Wealth Management. Just some headlines to tell you about. Speaking of Indonesia, Bank Indonesia continues to intervene the FX markets aggressively. Of course, it wants to keep its rupiah stable. It's been under a lot of pressure. Also, intervention possible for Singapore. It says that it won't rule out intervention in the stock market. That's according to a Singapore official. It's not something I've heard before, but I guess trepidation in the market, and we're seeing losses. And Singapore now also saying it won't rule out intervention in its stock market. Now, more from my interview with Indian Commerce Minister Piyush Goyal discussing the country's trade relationship with China and other nations. Take a listen.
I think our tariffs are a protection against these unfair trade practices. Or countries, let's take the RCEP region. Countries which cross-subsidize, which subsidize in one geography, move to another, and from there ship goods to a third. There are several ways which we are continuously finding. And it's like trying to remain abreast with new ways of beating the system. And a lot of our tariffs are to do with such protection against such economies. If you look at the United States, for example, while our overall tariff may be 17%, but a lot of it is products which we don't import it at all. Our applied tariff to the United States is probably 7 or 8%. It's not humongous. So really, it's a question of understanding India's tariff story. We've done an FTA with Australia a couple of years, 3 years ago, with UAE, with the 4 EFTA countries. We're in active dialogue with many other countries and group of countries. So we are a country that believes that bilaterally we can work together with countries which have fair trade practices. And then we don't need this kind of protection. Indian industry is very competent. They can beat any competition in the world if everybody sticks to the rules of the game. It's the it's the irregularities or the unfair trade practices where we need to protect through tariffs. So I have absolutely no hesitation in saying that bilaterally we have a lot of elbow room in working with developed countries and countries where we find equal opportunity to do business.
You made a lot of reference to China. Do you see that trade relationship with China evolving? I mean, if you're laying the red carpet for the likes of Tesla, why not accept a company like BYD, which is looking for a domestic partner in India to do EVs?
Well, we need to be convinced that they will work by the rules of the game, and several unfair practices which are gradually coming to light as more and more companies come to us with what's happening, the kind of dumping that's happening in steel, for example. As we understand how they are doing third country subsidization, so country A is where the subsidy is provided, whatever, you know which country I'm referring to. It goes to country B in the RCEP region, where they do the requisite value addition, which becomes simpler because the basic raw material is moving at very low prices. So value addition norms are easier to meet. And that subsidized product is being dumped on other countries like us. I mean, as these practices come to light, we have to be cautious in whom we allow to invest in the country. We have to be cautious about our strategic interests, our security interests. So it's a mix of many issues before we are able to take that decision.
So it's not a definite no for BYD. It depends on whether it can convince you.
As of now, it's a no.
Hello, it's Indian Commerce Minister Piyush Goyal in what is a very rare fireside here in Mumbai. We'll look at the outlook for India's IPO market with the Managing Director and CEO of National Stock Exchange amid market volatility due to tariff uncertainty. That exclusive coming right up. Keep it here with us. This is Bloomberg. Well, Asian markets showing signs of life with the benchmark MSCI Asia Pac Index rebounding from its worst loss ever on Monday. Take a look where we are in terms of that benchmark, currently up by 1.9%. It was as high as 2+% earlier on. We're seeing gains also in Japan, and that's on the back of expectations that perhaps Japan and the US can negotiate further when it comes to those tariffs. And Indian stocks emerged with modest losses on Monday despite a tariff-driven sell-off in global equities. Local media saying that the market capitalization of Indian companies has dropped $349 billion from their March peak. Take a look where we are in terms of the Indian Open right now. It is in positive territory, pretty much in line with the rest of the region. We're seeing the benchmarks gaining by at least 1.5%. Let's get more on the Indian market. The CEO of India's National Stock Exchange, Ashishkumar Chauhan, joins me now for an exclusive interview. Thank you for joining us.
Thank you.
Even as we talk about a recovery today, we're seeing losses of about $1.5 trillion. That's a huge amount.
Now you can take it from the peak, but if you look at it the other way around also, that 2014 when Mr. Modi took over, the market capitalization was less than $1 trillion. And today it's close to $5 trillion. So effectively, there has been a great wealth creation using stock markets, and naturally there has been a slight downward trend over last almost 6-7 months because of the elections in US and expectations of interest rates going down but not actually going down, and then the new tariff structures that have been announced. So overall there has been some amount of losses, but India has also been largely sort of been on the sort of sidelines, unscathed, I would say, from the rest of the world because the way Indian exports work, Indian economy works.
It's hard to see that India escapes unscathed, especially when you think about how international investors have been making exit from the markets. And add to that, people are also saying we've not seen the worst of the markets given the tariffs and the headlines we're seeing every day. How are you assessing, digesting all of that?
In a way, the foreign investors have been going out before even the election in US happened, right? Why? Is because the interest rates were tightening in US, and they were also taking money out of the entire emerging markets because of the same reason that carry trade was actually reversing. And that's what is very different from the current cause, which has seen the routes across the world over last few weeks. And for me, in a way, this is just the beginning of that framework. India is on the sidelines of those activities, and if you've seen, the tariffs also on India are somewhere in the middle, and India doesn't have those kind of exports which are being tariffed heavily. So effectively, India is into a what I call slightly a better position than rest, say China or any other country in ASEAN.
So you see resilience for India. Yet when you take a look at the volumes in the cash market, you do see them at multi-month lows. I'm just wondering how you're assessing that. Is that impacting sentiment?
No, bound to happen, because when markets go up, the volumes go up, and when markets remain down for like here in case of India, probably 6 months. And that's why you see the volumes not being so high, but that's a cyclical nature of the business we are in.
It's also driven pretty much by retail investors, and we know that when it comes to fraud in the market, we're seeing an increase on the back of that. Is that something to be worried about?
In fact, the retail investors have been backbone of India's secular growth over last 10, 11 years, and Mr. Modi will, I think, celebrate 11th year in May of his regime. And for me, the retail investors actually have been putting more money, and that's where probably it will continue, given the fact that India is on its own, it's growing very fast, and even otherwise it's going to have at least 6.5–7% growth this year also. So broadly speaking, there is internal momentum to India's growth, and naturally it will be one of the beneficiaries of what I call the multilateral system, the WTO and other things actually going down and becoming bilateral, because overall in multilateral system, China had actually managed it well, and of course the multilateral system also wanted to mollycoddle China over last 35–40 years to win it away from Russia. If you will recall, Henry Kissinger was sent to China through Pakistan to win them away, and last 50 years, that was literally 1972, so almost 53 years. And since then, China has been managing multilateral systems beyond imagination, and today that is on the verge of breaking out, and somewhere there will be beneficiaries of, at least slight beneficiaries of this newer world system that is emerging vis-a-vis what have been the beneficiaries in the past.
When we talk about retail investors, it's also about financial inclusion. We have that 250 rupee systematic investment plan. How crucial is that?
In a way, literally 60 million Indians are putting monthly $250 or $100 a month, each month, just directly, not because of the 401k or similar plans, but there are other similar plans which are also putting $1–1.5 billion a month systematically into Indian stock markets, and that's also one of the reasons you can see there is a huge buoyancy in the Indian market, and Indian people have started trusting Indian entrepreneurs and Indian businesses. So that's how I see it's a more symbiotic relationship between the investors and the entrepreneurs.
But the thing is, it comes at a time when there's so much volatility in the market. It impacts sentiment in a big way. I'm just wondering, will that affect the uptake?
No, it remains to be seen. At the same time, India is on the move. India is actually growing vis-a-vis the rest of the world. So you are comparing, say, a peaked China with ascending India and trying to think that if China goes down, India will go down. It doesn't, because somebody has to go down, somebody will go up, right? That's how the world will work.
You know, we know that you made some changes recently in terms of the expiry from Thursday to Monday. Talk to us about the rationale of that move.
No, it's basically we had asked the investors about what they want, and also the trading members, and many of them have suggested that we need to do a change because of the new regulations that are coming, and they wanted to also see how this works, because exchanges are allowed in India to take up the expiry changes, and in fact our competition had also changed from Thursday to Friday and then to Tuesday. So it's a normal thing. It's not something which is substantial.
But what's been the reaction in the market so far?
And so we have
might you consider making further changes?
So we have not gone ahead because the regulator has come out with a new consultative paper, and so we are just waiting for the further direction from the regulator.
Given the uncertainty in the environment right now, what do you see as the biggest risk for the Indian market?
Broadly speaking, the world is going through a tumult, and we will have to be a part of it. All of us are part of the world, and so we'll have to while our time and slowly ensure that we sort of wade through this turbulent waters into a safer harbor. And I think currently, if you look at whatever is happening in the world, we are doing a good job, and I'm sure our government and our regulators will also continue to take us through safe harbors.
Is the uncertainty impacting the IPO pipeline?
IPO pipeline has been surprisingly good. At the same time, what has happened over last 1 week across the world has been very worrying for investors across the world. And that's where you might see, if this continues in some ways for longish period, you will see some amount of backlash. But overall, March and April early, we have had a very large number of filings which have happened.
So can you provide some numbers? Like
more than 50 IPO filings happened in the last 2 weeks of March itself, because March is actually in India the end of the financial year. So that's where a lot of rush was there. But that doesn't mean those people will follow up with their actual offers, and it takes somewhere between 5 to 6 months at least to get the approvals, and by the time if the markets improve, they will certainly want to come in.
And how big do you think these IPOs are going to be? Give us the size that is expected.
See, overall last year, if you see in 2024, we had 260 odd IPOs at NSE, which raised around close to $19.6 billion on IPO alone. But overall, if you look at REITs, InvITs, bonds, commercial papers and all, we raised around $210 billion, so which is one of the largest raise of any kind in the world through the organized markets. But just the IPO market itself, out of 260, around 200 were what we call SME. India has, and NSE has a very strong SME flavor. And so 200 were tiny numbers, like raising $4 to $5 million on average, which is very small. But the other side, on the large 60 odd IPOs, they raised probably $150 to $200 million apiece.
Ashish, we've seen a rotation from India to China. Do you see that rotation back from China to India?
We actually didn't see that. It's a perception which has been created. The money never went to China, nor it came from China to India, nor to India to China. India and China are part of the MSCI World Index, and that's where emerging market index, and that's where people who put in funds, they actually put in funds in proportion. When they take out, in. At the same time, we need to make stories, so we keep on making all these stories. And
you cannot blame the media for that.
Not at all. I'm just all of us do. We try to think why, if my market is going down, it's going somewhere else. Sometimes it goes from both the markets, and today is one such circumstances where there was a risk of today. While coming here, I was worrying about whether there is going to be a risk on going forward, that whether people will find US market to be worth investing in going forward, or other markets will be actually gaining more ground.
Ashishkumar, thank you so much for that. National Stock Exchange of India CEO Ashishkumar Chauhan, we thank you so much for the insights. Well, here's a look at our guest for tomorrow. Keep it here with us. This is Bloomberg.